Hi, Jonathan York, Bay Financial Partners, looking at investment markets. A really tough week for US equities towards the end of last week. Really was sort of a little bit of weaker data coming out of the US, concerns over tariffs, and obviously the rhetoric coming out of the White House. Now, although inflation is falling, there is worry that potentially Trump's obsession with tariffs could lead to inflationary pressures going forward, and that will certainly see the Fed being on hold now for probably the next couple of meetings, if not until sort of third quarter of this year. Now, certainly that won't please Trump because he wants lower rates. Given the Fed is independent and Jay Powell has come out on the tape now and, commentary and minutes that have been released from the Fed, sort of saying that the Fed's in no hurry to cut rates further. You've got a pretty robust economy and you've got inflation that, while it is falling, it's still a little bit sticky out there. That slightly weaker data has seen rates fall at the sort of longer end in the US. 10-year is back at 443 and the 2-year is just above 420. But the other concerns for the US economy, say, is the rhetoric coming out of the White House. It appears that US foreign policy has done a complete sort of U-turn now, and Trump has firmly sort of backed the Russian horse. He is now sort of criticizing Ukraine, blamed Ukraine for starting the war, which is quite ironic because it was Russia that invaded Ukraine. He's also referred to Zelensky as a dictator and the fact that Ukraine doesn't have elections. Which again is quite ironic because, really Putin is the ultimate dictator and there are no democratic elections in Russia. And then also as well, they've started peace negotiations between Russia and the US, with Ukraine not being present. So what appears to be a pretty major change in US foreign policy, it's just going to be very interesting to see how it plays out. Now, oil is backed up, potentially with a slowing US economy, back to just above $70 at $70.20. Now, in the UK, a little bit of good news, a little bit of bad news. The good news was that GDP was slightly positive, at plus 0.1, but the bad news was the inflation has sort of spiked up a little bit, and that's just above 3% now. Now, on those sort of levels, it's potentially a little bit difficult for the Bank of England to cut interest rates further, although certainly the UK economy needs it. Now, in the EU region, it's really sort of scrambling to try and work out exactly what Trump is up to. Clearly he is sort of backing Russia and sort of Putin, and what will the economic costs for Europe. Now, in Australia, the Reserve Bank did finally cut interest rates just by a quarter point, taking the cash rate down to 4.1. Though potentially it was a sort of a hawkish cut because, the commentary that came out sort of said that, potentially you're not looking for a huge sort of interest rate cutting cycle. So potentially sort of analysts and economists have sort of viewed that, potentially you're not looking for a further rate cut now in Australia until maybe sort of May or June of this year. But on the positive side, certainly iron ore prices have increased a little bit, and that's obviously good for the Australian economy. Now, here in New Zealand, obviously we were expecting a rate cut from the RBNZ, and they duly delivered the 50 basis point cut, which everyone was expecting, taking the OCR down to 375. and potentially now it's looking like another 50 basis point cut in April. So in which case I would take the OCR down to 325, and now some banks are now even forecasting that potentially sort of neutral rate could be around sort of 275. Because the New Zealand economy certainly is struggling a little bit out there. Though net migrations are still holding up and slightly positive, but certainly retail spending was down a little bit. Though on the business confidence surveys, etc., they are showing slightly sort of improved figures coming through and a little bit more confidence and optimism creeping into the economy. But as with all interest rate cuts, it will take time for that to sort of filter through. The sort of good news is that, many New Zealanders will be refixing their mortgages in the next sort of 3 to 4 months. And obviously there will be much lower rates than they're currently on. So that will give more domestic income to be spent. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.